fascinating topics. We've got a great group today. I'm Kai Sheffield. I'm the head of crypto at Visa. I think we're going to go around and everyone's going to introduce themselves, and then we'll dive in. You want to start, Alan?
I thought I was going to...
just introduce yourself.
Coming in hot.
All right, so hi everyone. My name is Alan from Singapore, from the MAS. So great to be here. So I look after digital assets and the work that we do on AI. So glad to be on this panel and share what we do.
Hi, everybody. My name is Tyllen. I'm the co-founder and CEO of Payman. We are building the trusted way AI will interact with money. We are an early stage startup, have been around since 2024, and excited to be here with this incredible panel.
Hi, I'm Abhishek Vaidyanathan. I go by Abby. I'm Chief Legal Officer at the NEAR Foundation. The NEAR Foundation supports the growth and development. It's a Swiss foundation, and it supports the growth and development of the NEAR protocol. NEAR protocol is one of the most widely used blockchains by monthly active usage, and is a scalable and user-friendly blockchain, kind of purpose-built for agentic commerce, and we'll surely dive into that a little bit today.
And my name's Rich Widmann. I run crypto strategy at Google Cloud, and our team is primarily responsible for a number of Google's crypto efforts, as well as thinking about how digital assets and artificial intelligence can play together. We recently launched a protocol called AP2, which is an agentic commerce protocol that we'll talk a little bit about today, but that's my remit.
Yeah,
Thanks for having me.
Let's dive in. Let's start there. Like last month, you announced this protocol. What does it actually do? What are the use cases that you're focused on? And then as a part of the announcement, you also referenced an extension for stablecoins. How do you see stablecoins fitting into the broader work Google's doing in the space?
Yeah, so I'll just give you some background. So the AP2 protocol is really an extension of another protocol we launched called agent-to-agent. And the agent-to-agent standard is really a common language, instructions for anyone who's building an AI to be able to equip that AI with the ability to interact with anyone else's AI model. So you can imagine if a retailer is building an artificial intelligence or an LLM to talk to customers, that agent may also want to talk to a customer's agent at some point in time. They need a way to communicate with one another. Now, naturally, if we're thinking about retail and user, ultimately those agents are talking to one another, hopefully to engage in commerce, right? And so if you're going to have a protocol for these things to talk to one another, you also need to think about things like identity and payments. And so the AP2 standard is essentially an addition to that, which allows agents to make transactions and receive payments from one another, ideally for any agentic commerce purpose. It could be for physical goods. It could be to get access to digital subscriptions or other things like that. And so why do we think about stablecoins? I think if anyone here is in the payment space, if you're a regulator, if you are in the AI space, one of the big challenges is how do we get some of these AI-related applications to play nicely or integrate with current payment rails and payment systems. And there's a lot of exploration that's happening around that, but given the legacy kind of, I'll call it like technical debt that exists, it can become really difficult to actually have AI agents interact with, for example, bank APIs or APIs from traditional rails. One of the things we saw as an opportunity around crypto is sort of the same thing that I think we all are familiar with now. It's been just over 10 years, is that crypto is really in and of itself an open payment standard. And so if I have an agent, I think we should be able to use the traditional rails. But we also want to make sure that those agents can use new forms of payment that allow for new forms of business like micropayments and borderless transactions. And so that's one of the reasons why we thought about the X402 standard, which is a payments protocol used for stablecoins, and made it compatible with AP2 out of the box.
Yeah, I want to come back to the use cases, but first, Abby, for those who don't know, like what was the founding story of NEAR, and what's the relationship and connection to the birth of generative AI connected to NEAR?
Yeah, so maybe to take the latter portion first, our founder, Ilya Polasukin, back in 2017 was working at Google Brain, as it was then called, and was one of the co-authors on Attention is All You Need. So that was the paper that ushered in really the generative AI era by kind of creating transformers and the T in GPT. So very, very deeply connected with really the genesis of the era and the world that we live in today. Now, following his time at Google Brain, Ilya and his co-founder Alex Skidinov actually established Near AI. So Near was actually an AI, project first, and their goal was to really teach machines how to code. And today, that reality is here with apps like Cursor, but at the time in 2017, it was a novel frontier research area, and to power that, they actually were crowdsourcing research from around the world. And to do that, they needed to be able to pay these people. And they looked at the current solutions available then, which were PayPal, for example, which wasn't really suitable at the time, or Ethereum, which had been established, but was not really scalable or kind of cost appropriate for the types of payments that they were looking at, which were to a variety of people around the world. And so they actually established Near Protocol at the time. And the idea behind it is to create a scalable, user-friendly blockchain that they could use to actually pay these academic researchers. And that project kind of took them in a bit of a different direction. And today, Near is both scalable, fast, and supports cross-chain interoperability. So you can actually use Near to transact with a number of different blockchains. But I guess the story to TLDR it is Ilya was instrumental in establishing the T in GPT, and that journey really took him to actually create a scalable blockchain to be able to crowdsource the type of research that was necessary for teaching machines to code.
I think that's one of the most interesting use cases, and we've seen this in terms of early adopters of stablecoin payments. Companies like Scale.ai, who have been helping many of the models be able to get access to data labeling. If they're paying thousands of contractors and freelancers across the world, how do you send $1 from San Francisco to the Philippines? Many existing payment rails haven't really been designed for that. And so we've seen more and more of these examples of companies like Scale using stablecoins for payouts. But Tyllen, your story fascinates me. When we met, you were working in crypto. I think you were on paternity leave, working in crypto, building crypto infrastructure. And then you started Payman to build payments infrastructure for AI agents. Can you talk more about some of the use cases, what problems you've been looking to solve, and kind of your background in crypto, how you approached it when you started?
Yeah, so almost 2 years ago, there was a big shift in where money was going in VC, where it was going to AIs to basically replace people. And I was about to have a daughter, so I was like, well, this doesn't seem like a good future for my daughter to grow up in necessarily, because everyone's saying AI is going to replace all humans. So I was like, well, how do you align incentives between AI and humans so that we don't totally get replaced? And then the thought was, well, if we're paying AIs to do a bunch of things, surely AI will look at us and say, well, you guys are valuable too. How about we pay you to help us do some things? And that's when the idea started to come around, how do you get AI to pay people to do things? And basically, don't ever give me 3 months of paternity leave, because I probably won't come back. I ended up building the first version of the product and started to really probably do the first major use case ever of AI agents trying to go and do something in the real world. And that was along the lines of getting it to pay people. Since then, what we've realized is AI getting access to money, whether it's stablecoins or within banks, is really built on the core tenet of trust and guardrails. What we've seen is there's a lot of use cases where AI just moving money could be way better than what we're doing today. You can think of your own banking experience where maybe you need to go and pay your nanny $1,000 at the end of the week, in which case you'll probably you'll go to Zelle, you'll have to add her as a payee, you'll have to go and check if you have enough money in your checkings and savings. These are all things that are tasks that an AI is well suited to do, but the actual application hasn't been built yet. So we're seeing a lot of early work there when it comes to actually going out and using stable coins. It's basically the same thing. You can go and wrap a lot of this existing AI infrastructure around the payments APIs, but can you make these payments APIs and AI agents work together? I'm sure we're going to have a lot of time to talk about that on this panel, but that's where we're seeing a lot of this early. stuff.
And then Alan, from the regulator's point of view, kind of what's your reaction when you hear about agents transacting, agents getting money? How do you think about what controls, what needs to be in place, what guardrails have to exist?
Well, first of all, I think there are a few. Let's unpack this a bit, right? So there's stablecoins, and then there's AI. Each of them deeply complex, deeply technical terms. We're still at a very nascent, I would say, stage of development for each of this. Perhaps you would say the technology is very advanced, but I think the supporting ecosystem and the regulatory thinking, I think that's something that we are really working together. I think both in Singapore, I think internationally as well. But just to give you a peek in terms of how we're thinking about this, within the MAS, so we've kind of have three distinct mandates. We are central bank, we're integrated regulator, but we also have a mandate to develop the financial center itself. In 2023, we finalized our stablecoin framework. So that's primarily for value stability. We are in the process of making amendments, legislative amendments, to formalize it. So through the process, I think we see lots of very interesting use cases, ranging from cross-border payments. We see use cases around payouts on the corporate side as well. Interesting use cases around people setting limits, programmability, for example, conditions in which you can or cannot use certain reward programs at certain merchants and otherwise. I think where we see AI agents coming to place, I think it's the next step of evolution in terms of how use cases could be unlocked. On the AI side, we've been working on this program, which is really looking at how AI is to be deployed in financial services. That's looking at the fairness, ethics, accountability, and transparency as core principles, but taking that further from a financial institution perspective. How do you allow and accommodate, for example, the use of generative AI? What's the level of accountability, for example, on the AI agent side? Whose agent is it, if you are kind of thinking about it? So the analogy that I would like to imagine is that when we speak about blockchains, a lot of people tend to think of it as kind of an open highway where you have different kind of cars and roads, or cars or buses kind of running around, whether it's public, private, etc. But I think what we have with essentially AI or agents is really driverless cars. So you think about if the roads itself, if we haven't gotten, for example, the conventions around seat belts, what's the expectation there, the highway code, so that if you are driving in a country that's a right-hand drive versus a left-hand drive, you can figure out what's the convention there. And then you add in driverless cars, and then I think these are additional complexities we need to think about. Not to say that we put a break in terms of thinking about it, but I think I think the road is ahead of us, really. And I think we need to approach this very systematically.
I love the analogy, and we've been hearing this concept of self-driving money for years, and it feels like that the innovation and advancements in AI is like finally starting to get to the point where you could see it working, even though we're still very early. And then we're also at this point where you have the existing financial and payment infrastructure that is actively updating, evolving to be able to adapt to these use cases. And then you have brand new infrastructure being built and trying to figure out how these converge. So maybe Rich, at Google, how do you think about Google's role of building new financial infrastructure, some of the work that you're doing within Google Cloud, and what financial institutions, what companies will need if they want to actually participate in these flows?
Yeah, so there's a reason, and I didn't get to mention this the first time, but the A2A and the AP2 standard are both open protocols. So we incubated them within Google, but then the A2A standard has been donated to Linux Foundation, and then we've had contributors from over 60 companies in the payment space, merchants, and even crypto companies, even the protocols themselves, kind of contributing to that core protocol. So our view about what our role is by virtue of the fact that obviously we have our own AI ambitions around building our foundational models with Gemini. We have a deep connection to users and merchants by virtue of Google Pay and commerce. And then we also have a number of kind of leading initiatives as it relates to the stablecoins. Our view is we actually serve as a really unique platform to incubate what might be those highways and then open them up and allow a public-private partnership and discussion about what types of cars should be there and what should their capabilities be. And along the way, we'll offer solutions. So if someone says, well, I really like this open protocol, but I'm not an AI company, well, they can leverage an agent developer kit that we use. Or maybe they want to use the open protocol but they aren't really sure what blockchain to use. That's why we want to partner with like the Ethereum Foundation or others to say, look, these are the rails, these are the core protocols or rules that you'll use. And I think we serve as a unique kind of neutral infrastructure player around that because people think of us very similarly in the cloud space, right? So people use cloud to run a regulated exchange or build a video game. And it's very analogous to how we've thought about and had success in that world, trying to do that in the AI space as well, or in the agentic commerce space specifically.
And to give a tangible example of that, like Payman's AI agent that we use to move money for people at banks or things, leverages the 8A protocol. Because when you talk to ChatGPT and you put in a prompt, it's not just one AI back there that's figuring out how to get it done. It's many different AI agents with different specificities on how to actually get the task or the intent done that you put in. When it comes to handling money with stablecoins, let's say I want to go and send this cross-border payment, you're going to probably have an AI agent that's going to ingest this prompt. And then you might have an AI agent, which we believe is going to be one that's going to handle a lot of money functions. These two agents will need to talk to each other. When they talk to each other, the money agent will tell the other AI agent, hey, maybe I need the additional wallet address on what chain it is, in which case that AI agent also leverages the AP2 protocol. And then you figure out how to make money move by just having two AI agents go and speak to one another. The other core thing is you need to build these AI agents on top of these protocols to make any of this work. So the roads are there, but the cars aren't. And people need to be building the Waymos and whatever other competitor there is out there to them.
Well, and the roads may be there, but are they connected, right? And so one of the issues is fragmentation, right? So you've got liquidity and on a variety of different blockchains. This is a huge problem of interoperability, which is often mentioned. And I think this is something that we've been very actively thinking about at Near and building around. And so one of the kind of products that is emerging from our ecosystem is called Intents. And what it is, we think of it as a unified liquidity layer that provides the connection between these different roads, which are heretofore unconnected. So that allows you in turn to use Near to interact with a variety of different blockchains. So if you want to use your Near account, you can actually that can then in turn trigger messages on Solana, on on Ethereum, on Bitcoin, et cetera. And so what that then provides is, again, the connection between the roads, again, to use this analogy, and in turn reduces the cost and friction associated with this fragmentation. And so one kind of concrete example of this, partner in our ecosystem just launched Stableflow. And so if you go to stableflow.ai today, this is now one of, if not the cheapest way to actually transact in USDT and swap USDT between chains. And so you can now do this up to $1 million for $1.50, which is pretty well the lowest I've heard of. And so again, we are really focused on building those roads, and I think it's an exciting opportunity, but with a lot of sort of I think questions to be answered around the regulatory and other implications.
One of the things that just to kind of zoom out, and Kai, I know we've talked about this privately, is right now everyone's kind of getting this brain surgery view. We're all unpacking kind of the nuts and the bolts of this. But from a user perspective, really what this is going to look like is the way that you're shopping or using a browser today. I mean, if you think about it, somebody used this really great analogy, which is what's the difference between the Nike and the Reebok websites? The shoes face the different way. That's it. There's literally no difference. And you would think that's a perfect area for competition is if I am Nike and I want to outsell Reebok, I'm going to make the buying experience, the browsing experience more intuitive, more personalized. And really people haven't done it. And I think that's where the AI, kind of the LLM capabilities come in. But as a user, you're just going now, instead of typing it into search or something like that, you may be typing it into your Gemini interface or ChatGPT, and then getting a list of options, and not just options, but recommendations alongside of that. And so, there's a whole lot of plumbing that goes in that. We're kind of talking about these layers of the payments layer, the information layer, the auditing layer, and then the actual agents themselves. But for users and for folks who are in the policy space, I think the way that we should be thinking about this is sort of it's in the next evolution of something that we're all doing every day with a browser and has now become basically invisible to us. And the goal is that a lot of this, again, becomes invisible to the end user. So they're not wondering, hey, does my AI have this form of payment or that form of payment? It just has a balance. And then it uses smart routing to send an optimal form of payment for the cheapest cost to the merchant who wants to receive it.
Yeah, I think this is something that we've learned at Visa's. There's so much that needs to happen before the transaction. You have to have identity for the agent. You have to be able to have the merchant know that this is a good agent that was authorized to buy, and it's not an agent that's there doing something malicious. And so there are all these steps in handoffs that have to happen before you're ready for the transaction. I want to go back to the example you were giving, Tyllen, of this concept of when people think about an agent. I think it's easy to think about it as a singular monolithic thing. It's the agent that's doing all of this activity. It sounds like the vision that you see is it's actually, even if you're interacting with one agent, whatever task you give it, they're going to need an army of agents behind it to go and figure out that are going to be specialized to accomplish that certain task. And so we're seeing things like the model context protocol, different standards where agents can talk to each other to help solve something, but there hasn't really been a payment layer to that. And so it seems like stablecoins could have potential in this element of, you give an agent a task, it has to find an expert. How can you find, search through thousands of agents that specialize in that task, and maybe it only costs 1/10 of a cent. And so can you then pay 1/10 of a cent to help complete that task? But Alan, how do you think about this? Are we going to live in this world of modularity where an agent talks to many others? Do you think it's going to be more monolithic? Like, what's the MAS view?
I think intuitively, I think all of us like options, that we can mix and match. So that's one view. But I think there's also the aspect around economies of scale. So there's argument to say that you don't, just because you can, doesn't mean that everybody's going to learn how to assemble your own car, for example, or fix your own furniture. For good reasons, you might say, I'm just going to work with an integrated contractor or whatever, and have this assembled on my behalf for me, right, for example. So I think the ability to switch out different tires of a car may be an option, just to stay on the analogy a bit. But just having the option may be good enough. Doesn't mean that you will necessarily exercise that option all the time. I think the other aspect that as we think about this is, as stablecoins develop, the protocols develop, whether it's on the AI agent's perspective, I think there's a recognition that as this develop needs to be done on an open and interoperable manner. I think everyone would agree on both sides, on the official sector and also on the private sector. Now, the question is, how do you achieve that, right? Do you do that? One, I think there's certainly the view of regulatory clarity, the space for innovation. Then the question is around what are the supporting infrastructure that needs to be in place. Again, different countries have different considerations. Things like identity, for example, is that to be provisioned by a single centralized entity? Is it going to be provided by a few? Or there could be a federation of different types of identity? I think that's something that we need to think about. So I would urge maybe thinking about the ecosystem that supports some of the core activities, and some of it is around the role of the public sector, but I think a large part has to be the private sector, and I think conversations like this are very important to bring this to life.
So as these standards emerge and as the infrastructure develops for agents to make payments, it seems like there are like two ways you could look at it. One is, how do the traditional enterprises incorporate agentic flows into their core business? And what are the things that you could do that you couldn't do before? And then there's another of, how does it change what it means to build a company? If you're starting a company in 2026 from the ground up, are you going to have these single-person billion-dollar enterprises that are mostly run by agents? And so, Abby, like we've talked about this before, of in crypto, there's this term DAO, or decentralized autonomous organization. But it's never actually been autonomous. It was more just people in a Discord who are voting with tokens. Like, what's your view of, are we going to start to see actually like self-operating entities? Like, that seems like kind of a weird world. Like, what could that look like with this infrastructure out there?
Yeah, well, it's a great question, and I think we've to kind of ground this a little bit, we saw recently the integration of ChatGPT and Shopify, and so I think if you take that as an example, I I could easily imagine a sort of autonomously operated Shopify store, right, where the goods are procured by a self-executing smart contract, and then bought or sold electronically or online. And that future, I mean, without a human in the loop, a little further away, but with a human in the loop, with some kind of legal wrapper or regulatory structure around it, I think is probably within the not so distant future. And I also know for a fact that many regulatory authorities, and I'd be interested, Alan, on your thoughts on this and whether it's something MAS has considered. But I know from conversations with various regulators, it's something that they're actively thinking about and trying to encourage. The first step really being, for example, what is the scope of authority for an agent that has the ability to bind a corporation? What are the liability concerns associated with that? What are the insurance requirements or fiduciary requirements if, say, the agent is managing assets on behalf of, either on behalf of an LLC with human members, or actually investing on behalf of, as you've probably heard, a variety of asset management kind of agentic use cases. So, I mean, without opening Pandora's box, which I believe I may just have done, I think these are very, very both interesting issues, and ones that I think we will start to see. Both formal regulatory engagement and perhaps further clarity on in the kind of coming 3 to 5 years. But I think, again, the two probably primary examples, I think, could you see an autonomous e-commerce store? Probably. Could you see an autonomous sort of asset management firm? I mean, look, already on a self-custodial basis, Near has this capability. So, if you were to take that and instead of having it sort of self-execute and put it within a legal wrapper, you could very quickly have an agent-based, hedge fund or asset management firm. But again, I mean, that's going to come with some serious liability risks for the developers at the moment, without having a further understanding, and will probably be more of a sandbox kind of exploratory exercise for the time being.
Yeah, there are some great stories about Anthropic giving their model Claude access to running a vending machine, and what it chose to procure, and some of the things that it did. So I think we're still a ways away. But I want to come back to Tyllen. In the early days of Payman, when you were starting with agents, paying humans, where did stablecoins fit into that? I know you experimented with a bunch of different payment methods. Can you talk more about what were agents paying humans for? What are some of the use cases that you saw? And then, were stablecoins better? Did you think that existing payment infrastructure wasn't able to accomplish, the payments that they wanted to make?
From a regulation standpoint, it's a lot easier to open up a crypto wallet that can hold stablecoins internationally than you can go and partner with a bank. So it didn't necessarily matter to us which one we went. It was more speed to market, and the speed to market that stablecoins offers you is insane compared to going and working with a bank. That said, because I came from a crypto background, and knowing AI and how scary it is for people, going full AI and crypto was not the best way to say, you can trust me with your money. Nothing's going to happen. We leaned into going to the regulators, and that's why Visa investing in us and doing things like that really helped bring I think a reputable place where you could trust AI with money. And then to me, stablecoins are this it gives people who are maybe scared of crypto a nice chance to dip their feet into the water and see what does all this mean. I'm not saying you guys are going to be buying Pepe token next month, but where stablecoins worked well was we could bring in anyone across the globe and have them be part of this economy where AIs were really trying to figure out, and it's not AIs, it's at the end of the day, the things running these AIs are all enterprises. Enterprises are trying to find value. AI is one way that provides immense value in tons of different automated ways and tons of different logical ways that we could previously do, we just couldn't do it at the speed that we're doing it today. Where all of these rules engines that you had to build before, you can get that out of the box with a prompt also. So then if you can build AI agents that could do different things with money that would take your team years to build before, but now you can get it there super quickly. And on top of that, when you had markets you couldn't access because it would take you years to also build partnerships, it would take you capital to go and do that. Now you have these pieces of software that could be built so much faster than before. You have markets you can enter into before that you couldn't do. It would take years. And it's just like, if this opportunity is so easy to see that the way that money will be interacted with all around the world and economies will be created, like that's going to change in such good ways. And I just get excited about that, like super stoked.
Rich, how do you think about it? Because I think there's this interesting comparison between core ledgers in traditional accounts and stablecoin wallets. And if you're going to have hundreds, maybe thousands of agents, and you want to be able to spin up wallets, program in different rules around what they can do and what they can't do, traditionally core ledgers weren't necessarily designed for that. They were designed for humans, and you had one account, or you had your checking and your savings account. So do you see wallets being this new primitive that provide benefits for agents?
Yeah, so the wallets and the underlying protocol, right? So Ethereum or Near or any of those, right? And the reason why that's great is because the function of the account, which is the wallet essentially, is already integrated or has an integration capability with the source of truth of the record. And the other benefit is that the source or truth of the record is open. And so if you think about like an agent-to-agent world, there doesn't have to be really this pre-existing relationship or this agreement to share this common database with one another like you might on a bank ledger, for example. You don't have to be the customer of Near to open a wallet and go and buy some stablecoins that are on the Near blockchain. I can't really open a Chase account without like going into a Chase bank and talking to them, right? And then I end up as a little entry on their ledger, and then everyone who wants to accept a payment from me from that Chase account is really talking to Chase and saying, does Rich really have $100 that he's saying he wants to send me? So in the protocol space, like agents could check that. If they have a wallet now, agents could check whether or not an agent has a form of payment that they can accept. They can actually verify in an open database that the transaction has taken place. And in fact, the agent that's sort of on the hook for performance of some kind, shipping the product or whatever, can actually store a transaction hash, again, on a public blockchain or a public protocol that would allow anyone to audit that. So yes, I've sent my $100 to the agent. It's verified that on chain. Has the agent actually performed? Did it show on chain that it executed the transaction that I asked it? And I think that's where not just the wallet, but the ledger or the protocol itself, the crypto protocol itself becomes, I think, a primitive that lends itself really well to these types of interactions in a way that traditional ledgers or even closed ledgers that you might see like in core banking or in traditional payments, it becomes a little more difficult, right? Because if I use a Visa card, really no one else is seeing that, right? No one else is able to see that. The only way that you can confirm that as the merchant is you see the payment, right? You get the message. And I think that's where, for agents, it becomes really interesting because I don't think they'll have that level of visibility in traditional ledgers.
So it's interesting that there are trade-offs here. I'm curious how you think about it, Alan, of on one hand, you have this transparency where every stablecoin transaction on a blockchain today is public. You could see it, so you could audit it, you can make sure you know that it happens. From a regulator standpoint, that gives you more visibility into it. But then as an enterprise or as a consumer, that everyone could see it. And so like you don't have any privacy. And if you're trying to build a business and you have an agent that's transacting on your behalf and there's a Dune dashboard that's up there showing the entire volume that you've ever done.
No more quarterly reports. You just are looking at the payment flows based on a public blockchain,
it's an entirely different
right?
game. So how do you think about that as a regulator of like privacy versus transparency, kind of where blockchains are today?
I think there's a lot of research done on privacy preserving technologies. Intuitively, we think we want accountability, but at accountability and transparency, how do we merge the two? I think that's very important. But maybe just to kind of build upon some of the earlier points, I think we've been speaking about a lot of actions actually done autonomously. The question is, do we really need the whole workflow to be automated? Or perhaps we still need, at least in the current state of things, a human in the loop, such that it's the human would needs to come in at the point of confirmation when you actually say, I'm going to sign off on the final transaction. But perhaps the heavy lifting that's done upfront could be offloaded to machine, for example. So I think that's probably an easier thought process versus going full-on automated right now. I think it's perhaps also a question of getting comfortable with how things are. I mean, that's how self-driving cars anyway started. You want to allow for the optionality for somebody to intervene as necessary. So I think that's probably where we see things actually emerge.
Yeah. No, go ahead, Tyler.
Yes, on that point, 100%. And this, I've been trying to build autonomous agents for a year and a half, and it's very, I don't even know what an autonomous agent means at this point. I've even questioned what an autonomous human is throughout some of these things. So it's been, there are key things that the logic can make better with an AI. The other part we miss with stablecoins is, for example, as we were trying to work with bringing AI agents to India to do more financial tasks, they don't want USDC in their economy. You know, they don't want, like, it's very hard to get any kind of stablecoins in there because all liquidity will go into stablecoins. And, like, India has a very great payment system with UPI. So then for us, it's more so the value lies within the AI and the AI agent and what it can do. And really, if there's anything you take away, it's how does this AI complete this intent, this payment intent? Send $5,000 to my nanny. Okay, the AI has to have memory. Nanny is not, I don't put nanny as my payee. There's an actual person that's the nanny. What's the cadence? Has this been a previous transaction? Is there a prompt injection that's coming into this? The really nice thing about this is you can see the chain of thought where that AI is going to try and complete this intent. And it, in some ways, it makes fraud. Like, you wouldn't think it. It makes fraud easier to manage because an entire chain of intent, an entire intent is a chain of thought. So my whole thing is, like, if you're going to go and build with these wallets or do anything, like, making those wallets work with an AI that can handle money is very crucial. And that's like making the car work with the road. You're not going to build a, 100-foot wide car and then place it on there and say, go drive. Like, this all needs to be created. And it's like, these are very tangible things that are happening today. And, like, you're going to see, it's going to be little subtle things. And to maybe beat another, not the car analogy, but, like, websites used to, Google came out with search, right? Websites all didn't have search. You couldn't even search for products on a website before. And then search started coming in. And then the way search had to be created was you had to create different data types that could go into search. You had to have better context. You had to make search better. It's the same thing for AI agents.
Yeah, and I mean, look, payments is one area. Coming back to this asset management example, let's take the kind of thought experiment of kind of reallocation. I want to take USDC and put it into a money market fund. I mean, how do I know that it's actually been allocated to the right money market fund? How do I know that the sort of chain of reasoning and the result is actually kind of consistent with the input or intent that I place? And I think this is another kind of research area at Near AI right now is sort of the formal verification. So can you have cryptographic proof that the result or output is actually consistent with the intent? And without this, I think we're going to be pretty bottlenecked in our ability to do, again, forget autonomous payments, but also any kind of really autonomous action, because we will not have the ability to have trust in the output or the action that the agent is supposedly taking on our behalf. And again, a host of liability and other issues that arise, particularly if there's not someone to point to when the agent doesn't do what you thought it was going to do. And you lost a bunch of money and you're very upset.
Yeah. So maybe wrapping this up, I think as we talked about before, like the transparency of stablecoins, you don't really have to guess what's happening. The protocol X402 that I believe was launched maybe 6 months ago. It's hard to even keep track of time in this space. 6 months was a long time ago. There are a bunch of great public resources that show dashboards. You can see every payment that's happened over it, and I believe it's done about $50,000 to date. I think it's done a few $100s in the last week. So question for everyone here, how far is some of this stuff away? Are we talking decades? Is this 2 years? Is this 5 years? Like, do you expect that we will see millions, billions of dollars of stablecoins being moved between AI agents? And like, how far in the future are we thinking?
So I think so if we talk about the growth paradigm for stables, I think we're going to see that continue to go up and to the right, and in what I'll call like the traditional human-in-the-loop type transactions. And whether it's for money management, treasury management, moving value across borders, that's very clear, I think. As it relates specifically to what we'll call like autonomous payments or agentic commerce, I think it's still very early innings, right? To your point about X402, adoption's very, very small. We're seeing a lot of micropayments, but I do think it's going to unlock new business models. My view is there's something we spent some time, Alan alluded to it, a few others did as well, which is identity is the other key piece here. And that's, I think, needs to get solved for a whole host of reasons, both to solve the downside risk, but also to really unlock potential around trust and understanding, like, is this Rich's agent acting on behalf of Rich to make a purchase, or is this a scam? And that's still not been built out yet. So I think we're still very early innings. I say it's inning 2. I think it's very, very early as it relates to agentic payments. I think stablecoins is later innings for sure.
I'll go with bottom of the first. But I think, look, I would echo a lot of this, and I think, again, putting on my legal hat for a second, you talk about identity. Are we going to have KYA? Know your agent. What does that ultimately look like? And actually, we have some builders who are considering this and actually beginning to build this out again with human in the loop, such that it's clear that there's a chain of authorization from human to agent to conduct activities on behalf of that human. How about dispute resolution? Right. I mean, we've seen some of this in terms of some of the work that Circle has done, for example. But what does it mean when machine has to litigate against machine? How is that actually conducted? Is it an arbitration? What are the means and mechanisms? How do they actually submit filings in the event of disputes? Are those resolved by self-executing smart contracts, and are those respected by enforcement or sort of mechanisms through courts or otherwise? And so, when you really think about the panoply of issues that need to be resolved, I really think, again, maybe top of the second, bottom of the first is where we're at. And again, the opportunity set here is quite massive. I really do think, we talked about the $1 billion one-person business. We're really going to see the world reshape before our eyes, but whether it happens in the next 2 to 5 years or 5 to 10, kind of remains. And we haven't even talked about robotics, right? Humanoid robotics also, together with this space, could completely reshape how, to come back to this autonomous business question, how businesses are run. And so, again, I always open cans of worms, but I'm going to now slightly close it.
Yeah, on that note, thank you, everyone. I think that's all the time we have. We're going to have to come back next year, and we'll talk about robotics, with AI, with stablecoins. We'll just keep adding complexity to it. But thank you, everyone. Appreciate it.
Thank you.
All right, everyone. We've got about 90 minutes. We will be back here at 2:10. Lunch is being served on the 2nd and 5th floor. And we will be talking about the future of AI governance.